And welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 22nd, 2026, and we're diving into the latest earnings report from Third Coast Bancshares. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. I'm excited to discuss Third Coast Bancshares' performance, especially given their record-breaking results for the 2025 fiscal year.
Revenue and profitability overview. Let's start with the top line. Third Coast Bancshares reported a net income of $17.9 million for the fourth quarter of 2025, with a diluted earnings per share of $1.02. John, how does this compare to their previous performance?
Third Coast has shown consistent growth. Their net income slightly decreased from $18.1 million in the third quarter, but it's a significant increase from $13.7 million in the fourth quarter of 2024. The net interest margin remains stable at 4.10%, which is a positive sign of their financial health. However, the efficiency ratio increased to 57.90%, indicating higher operational costs, primarily due to merger-related expenses.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 90 cents for this quarter. Third Coast Bancshares reported an actual diluted EPS of $2. How significant is this beat, John?
This is a substantial beat, exceeding analyst expectations by 12 cents. It reflects the company's strong operational performance and effective cost management, despite the challenges posed by merger-related expenses. The fact that only 3 analysts were surveyed might suggest limited coverage, but the results speak for themselves.
Operational efficiencies and future outlook. Third Coast Bancshares has reported impressive growth in their loan portfolio and book value. Gross loans increased to $4.39 billion, and the book value per share rose to 33.47 cents. What does this indicate about their operational efficiencies and future outlook?
The growth in gross loans by 5.5% from the previous quarter and the increase in book value per share are clear indicators of Third Coast's robust operational strategies. Their tangible book value growth of 17.7% year over year highlights their strong asset management. CEO Bart Caraway emphasized their consistent execution and transformation into a high-performing institution, which bodes well for their future prospects.
Balance sheet and asset quality. Turning to the balance sheet, Third Coast Bancshares reported total assets of $5.34 billion and a non-performing loans ratio of 0.49%. How does this reflect on their asset quality and risk management?
The asset quality remains strong with a low non-performing loans ratio, which is a positive indicator of their credit risk management. The allowance for credit losses stands at $43.9 million, representing 1.0% of gross loans, which is prudent. Additionally, their deposits grew by 7.3% year over year, showcasing their ability to attract and retain customer funds effectively.
Key takeaways. In summary, Third Coast Bancshares has delivered a strong performance for the fourth quarter and full year 2025, with record net income and earnings per share. John, what are your final thoughts on their investment prospects?
Third Coast Bancshares has demonstrated robust financial health and strategic growth, making it an attractive investment. Their record net income of $66.3 million and diluted EPS of 3.79 cents for the year reflect their high-performing status. With continued loan growth and effective risk management, they are well-positioned for future success.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Third Coast Bancshares' performance in the comments below.